Hello, everyone. The NASDAQ market has officially closed, and Plug Power Inc.'s ticker symbol PLUG wrapped up the trading session on Friday, October 17, 2025, at a closing price of $3.40 per share. That's a modest decline of around 2.15% from the previous day's close, with the stock moving within an intraday range between 3.38 and 3.59s. At first glance, it might look like just another red day for Plug Power, a typical dip after a volatile week. But the truth is, this small decline hides a much deeper story, one that reflects a subtle but powerful shift in investor sentiment that started earlier this month. While social media and retail traders have been buzzing about the stock cooling off after its impressive early October surge, the real action has been happening behind the scenes, and it's not retail-driven. What most traders missed was a significant uptick in institutional accumulation, a clear sign that larger, more sophisticated investors are quietly positioning themselves for the long term. To understand this properly, we need to look back at what triggered that big move earlier in the month. Plug Power's rally wasn't random hype. It was fueled by solid catalysts. Back in March 2025, the company completed a major warrant exercise, raising about $370 million in gross proceeds. That influx of capital served as a crucial liquidity lifeline, giving the company breathing room to fund its operations and strategic initiatives. Many small investors ignored this, distracted by short-term price swings, but institutional players clearly noticed. This confidence from the smart money comes despite Plug Power's ongoing financial losses, which shows that large investors are betting on the company's long-term execution strategy rather than short-term performance. There's a stark difference between how retail traders interpret Plug Power's situation and how institutions view it. While small investors worry about quarterly losses, institutions are focusing on the financial maneuvers that have strengthened Plug Power's liquidity and provided a buffer against future challenges. Now let's address the elephant in the room, the volatile nature of this stock. Plug Power's rise from its 52-week low of 0.69 to a recent high of $4.58 is nothing short of dramatic. It's the kind of movement that captures headlines and divides investors into two camps: those who see it as a golden opportunity and those who see it as a speculative gamble. And to be fair, both perspectives have merit. Plug Power is, without question, one of the most volatile hydrogen stocks on the market. It's highly reactive to sentiment, news, and policy updates. But what most people miss is that behind the daily noise, there are fundamental drivers shaping this volatility. Things like analyst upgrades, large-scale project updates, and institutional positioning. Take early October, for example. The sharp surge in Plug Power's price wasn't just retail traders piling in for a quick flip. The rally was triggered by a major analyst upgrade from H.C. Wainwright & Co., which raised its price target from $3 to $7. This upgrade came right after Plug Power announced the successful delivery of a 10-megawatt Genco electrolyzer array to Galp Energia, a major Portuguese energy firm. That deal was more than just a headline. It validated Plug Power's technology and international expansion strategy. Investors saw it as proof that Plug's hydrogen solutions were gaining traction overseas. The result? The stock jumped over 37% in a single trading session on October 3rd, one of its biggest single-day gains of the year. Now, couple that surge with the fact that Plug Power has consistently high short interest, often above 30% of its tradable float, and you have the perfect setup for a short squeeze. Short sellers rushing to cover their positions pushed the stock even higher, creating a rapid feedback loop that sent the price soaring before it inevitably cooled off again. The small pullback we've seen recently, including the 2% drop on Friday, isn't a sign of weakness. It's just the market normalizing after a speculative burst. Analysts from TD Cowen even suggested that a near-term fair value target around $4.50 might be more realistic as the hype fades and fundamentals take center stage again. So what's really happening underneath all this price action? It's not just traders chasing headlines. It's a tug-of-war between long-term believers in hydrogen's future and short-term speculators trying to ride technical waves. When we zoom out from the charts, the real story becomes much clearer. Plug Power is steadily making progress where it matters most, strengthening its financial base and advancing its technology roadmap. Recent institutional data reveals that major funds have been quietly accumulating shares. Institutions now own about 41% of the company, and the most striking detail is how their positions have changed leading up to the recent volatility. BlackRock, the world's largest asset manager, boosted its stake by over 61% as of July 2025. That kind of move doesn't happen by accident. It reflects conviction in the company's long-term direction. Meanwhile, other big names like Vanguard and State Street have also maintained or slightly increased their positions, indicating that large players are not fleeing the stock. They're holding or accumulating, even during times when market sentiment was dominated by fear and talk of insolvency. This institutional confidence doesn't guarantee future success, but it does paint a more optimistic picture than the doom and gloom narrative often seen in retail forums. One of the biggest concerns for Plug Power critics has always been liquidity, the company's ability to sustain its operations without constant dilution or debt. That issue was addressed head-on earlier this year when Plug Power secured a $525 million credit facility in May 2025. Combined with the earlier $370 million from warrant exercises, this funding created a strong capital cushion. Management has made it clear how this money will be used to drive its Project Quantum Leap, a cost reduction initiative targeting over $200 million in annual savings. The ultimate goal? Transitioning from being a capital-hungry infrastructure builder to a company with positive gross margins, ideally by the end of 2025. Now, let's take a moment to understand what Plug Power actually does, because that's often overlooked. Plug Power is not just a hydrogen producer. It's building an entire vertically integrated green hydrogen ecosystem. The company handles everything from electrolyzer manufacturing, which produces hydrogen from water, to fuel cell production, storage, and distribution via hydrogen fueling stations. Historically, one of Plug Power's strongest markets has been material handling, providing hydrogen-powered forklifts and on-site fueling systems to major corporations like Amazon and Walmart. These partnerships have given Plug a steady revenue stream, but scaling this business has come at a steep cost. The infrastructure required for hydrogen production and distribution is expensive and energy-intensive, which is why the company has struggled with negative gross margins and high cash burn. For years, that's been the Achilles heel for investors. The story sounds promising, but the numbers haven't yet caught up. However, recent earnings data shows improvement. In Q1 2025, Plug Power reported $137.7 million in revenue, up from $120.3 million the previous year. Even more telling, their gross margin losses improved dramatically, from 132% to 55% year over year. It's still negative, yes, but the progress is undeniable. The cost controls and pricing strategies under Project Quantum Leap are clearly starting to show results. But make no mistake, Plug Power's future depends on consistency. Investors will be laser-focused on Q3 and Q4 2025 earnings, watching for signs that this momentum can continue. Achieving a positive gross margin, or at least getting close, would be a major turning point. The company's electrolyzer business could also be a game-changer. With the global push for decarbonization and the growing competitiveness of green hydrogen, Plug Power is well-positioned to benefit. But this also comes with risk. Plug Power's cash burn, which has exceeded $600 million over the past 12 months, remains a red flag. If they can't continue tightening their spending, further dilution could be unavoidable. The company's growth is also heavily dependent on government policies and incentives. Any shift in tax credits, energy subsidies, or hydrogen production mandates could have a major impact on its economics. There's also a new potential growth area, supplying hydrogen for the AI and data center boom. As massive data facilities seek cleaner power sources, hydrogen could become a viable solution. Plug Power is preparing to tap into this market, but it's still speculative. The revenue potential here remains uncertain. So, where does that leave the stock today? At $3.40, Plug Power sits in an interesting middle ground. It's well above the average analyst target of $2.29, which reflects a skeptical consensus, but still far below the most bullish projections around $7. This wide range perfectly captures the tension between optimism and realism surrounding Plug Power. Bulls see it as a future leader in hydrogen, while bears view it as a capital-draining experiment that's always just one funding round away from trouble. The truth probably lies somewhere in between. Plug Power's path forward won't be a quick sprint to profits. It'll be a slow, disciplined marathon of cost management, scaling, and operational excellence. Investors who understand that and stay patient may eventually be rewarded, while those chasing short-term spikes could get burned by volatility. So in summary, Friday's small dip to $3.40 tells only a tiny part of the story. The real narrative is one of quiet rebuilding and strategic focus. Plug Power's management is working to stabilize finances, reduce costs, and push toward profitability. And the fact that institutions are accumulating during this period suggests growing confidence in that direction. For investors, the message is clear. Don't get lost in daily price swings. The real value of Plug Power will be determined not by hype, but by what happens on the factory floor and in the financial statements over the next year. Because in the end, Plug Power's future isn't about speculation, it's about execution. The hydrogen revolution will take time, and only companies that can manage both technology and money with precision will come out on top. This is not financial advice.